All right, everybody, it's Wednesday, August 27th, 2025. We start with our headline, Railroads.com and Semiconductors. Benjamin Graham, almost 100 years ago, recognized that trees grow tall and they don't grow forever. The highly anticipated Nvidia earnings came out today, and the stock dropped so far in the after hours between 2.6%, and I saw it go as low as almost 4%. Investing.com has a headline that sums it up. Nvidia quarter 2 results beat, but data center revenue just light as China weighs. Railroads were thought to provide infinite money for people until they stopped growing, and look at this. We have another headline from CNBC. China Nvidia rival Cambricon adds $40 billion rally with 4,000% revenue jump. I love Nvidia. I've always loved their graphics card. I've had them since I was a kid. They were destined to be the leader in this industry, and they were destined to eventually have competition. Remember, this space, they're not selling a name brand to people. People don't, at the end of the day, care about the name brand. They care about the performance of the thing that they're making. So without the wide moat aspect, Nvidia does have its days numbered in terms of its pricing power. It's going to have to compete with other companies, and as more companies compete with it more and more, let's just say the PE ratio of Nvidia eventually will get down to, in my opinion, the tens. Besides the .com and the railroads, we can also compare this to car manufacturing and look at all the competition in that space and the PE ratio of those companies. Nvidia after hours is dragging the triple Qs down, not enough though to trigger this head and shoulders top that we have been developing. So Nvidia is not dragging the market down to the ground, not quite yet. Markets will definitely digest this overnight and tomorrow and maybe all through the weekend before deciding exactly what to do next. Next up, community topics. Robschild sells out of all green stuff positions. If you're subscribed and you have alerts on your device, you may have caught my post earlier today. I alerted everybody that I sold out of all of this when the fund MSOS was essentially at 551 this morning. It dropped a bit during the day and then recovered back up to this level. Essentially, I took a look at the price sales of Tilray specifically, and it's around 1, which for a risky growth kind of a thing, that's not like super cheap anymore. It's at a point now where, if this does not get rescheduled, I'm thinking that we could drop back down, to the $2 to $4 level in this fund. Plus, I have been talking on the show, I said, actually, the last time I talked about this, I was going to sell around the 550 area because it is acting at this point as a resistance point. I said I'd sell between 550 and 560. And so, yeah, we're right there. It is acting as a resistance point. I made a boatload of money on here and I'm out. Be sure to subscribe to the channel and you might have a better chance of coming across my posts in the middle of the day in the future. Next community topic, YouTube comment response. I love this one because this is really on the right track as far as value investing goes. I had a commenter write, GTN is my favorite, is my value play. I live in Atlanta, no people in the company, and it seems like the market is overplaying the demise of cable television. So I'll do a quick walkthrough of my process to see what I think of this company. It's called Gray Media. First thing I'm going to do is check out its earnings per share. Does this company actually make money on paper? And yes, they do. They have a fairly good earnings record. Not only that, they have a 32-cent yearly dividend divided quarterly, and it's been very consistent for quite a long time. So it pays out a dividend, and I like that. I also see that the revenue has grown, and lately it's been staying steady, not falling off of a cliff or anything like that. So money is coming into the company. there's money being earned and it's being paid out. Those are 3 good things so far. On top of all of that, we have a 12-month trailing PE ratio of only 4. That's extremely low. All very interesting and good so far. Now we're going to take a look at the balance sheet. We can see total assets. It says $10.5 billion versus the total liabilities, only $7.6 billion. Good on first glance. However, when we open up the total non-current assets, we can see that a huge amount of the assets are in goodwill and other intangibles. This means the company spent a whole bunch of money and just says, yeah, our company's worth this much because we bought stuff for this much. And unfortunately, value investors don't typically use goodwill in their calculations. So when you scratch that out, we're only left with about $2 billion of assets. But let's see the whole story here. We have net PPE. They have land. They have buildings. Sorry about that, my mouse died. So what I typically like to do is, this is stuff that they can sell. I'd call this $1 billion worth of stuff. I like to discount this by about half, add that to, so that would be 500 million added to the current assets of 500 million. So you have about $1 billion of assets that I consider to be real assets versus their total debt, $7.6 billion. For me, this takes away a lot of the safety. If the company were to go through a difficult or very difficult period, it's hard to say if the company would survive. Can this company continue to make plenty of money and have plenty of dividend payments that continue? Sure, but it's not for me. Have any other stocks for me to see? Comment below your ideas. Coming up, also, by the way, thank you for your comment. I appreciate your comment and everybody's comments. It's really fun seeing what people are doing when what's on their minds. So coming up, tomorrow we have Thursday, jobless weekly claims. Remember, the continued claims is still creeping higher and higher. It can't just keep going up forever without a recession or worse, so keep an eye out for that. We also have Friday personal income and savings and PCE coming out, and as always, tariff updates. Thank you for watching, liking, subscribing, commenting, and supporting Robschild. Read my website in the description to go through my daily reminders, macro views, and portfolio. No changes to the crystal ball readings. Onto the charts, starting with SPX, S&P 500, we have, guess you may not know it, but we are at an all-time closing high in the S&P 500. Next up, I want to talk about gold inching its way up. I find this interesting that at the same time we have the 10-year Treasury note yield inching its way down, sort of battling each other for what is the safety haven. My whole take on gold right now is that gold has never been more expensive in the history of the United States when you compare it to crude oil specifically, and it's also very expensive compared to M2 money supply. Copper, housing, lots of stuff. I see gold as in a bubble right now. And one thing that needs to be considered with people that think gold is going to keep going up, well, by how much and over what time period? And this is what I mean when there's sort of a battle between gold and treasuries. At this very historic elevated level in gold, how confident are you that you can get a 4.24% return every year for the next 10 years in gold? How do you know that gold will go up by that much every year over the next 10 years? Well, you know you're going to get that return in a 10-year treasury note. And just to remind everybody, take a look at the chart of gold back in 1980, when if you were buying gold at the historically high price in 1980, you were not getting a 4% return every year for 10 years. In fact, you would have lost money in nominal terms up until about 2007. As comfy and safe as high prices feel to people, I'm going to say they can be very, very dangerous. It's human nature to see something rise in price so massively and assume that because its price is higher that it is safe and that it will just keep going higher and higher. And it won't. As I've said on the show before, your girlfriend's gold earrings are not going to be traded in for a house anytime soon by themselves. There is a limit how expensive gold can get. It can go higher, and it has zero safety for me because of its ratio to other things. Next chart, the 2-year note yield dropped today, looking like it's dropping out of a bear flag formation, meaning the market's expecting more cuts looking out over the next 2 years. Bitcoin still in dead cat bounce mode, in my opinion. The dollar index not moving much at all any which way. Gold thinks the dollar is just going to go down, in my opinion, and it's not. It's going flat. And as I said in the show before, I'm starting to think more and more that we might be building a base here in the US dollar. IWM, the small caps, let me zoom in a little bit more. Finding a new high here, actually looking sort of bullish. We have higher highs and higher lows. What else can you say about that chart? One area that I think should give investors a little bit of caution here is XLE, only because we have what looks to me like a cup and handle pattern. What you need with a cup and handle pattern is a cup-like thing with high volume on both sides of the cup. That's exactly what we have down here. We have high volume, followed by a handle. This is a range that we've been in, a parallel channel, and we just broke out of it pretty strongly to the upside today. When the energy sector starts outperforming other things, that's oftentimes a warning to higher risk areas of the markets. All that said, it's interesting too that XLE is often tied to crude oil, and yet crude oil is not showing strength at all. I mean, we did go up 1% today, but pattern-wise, this is obviously broken 65, tested 65. It looks like it's headed lower here. One of my largest holdings, EWZ, Brazilian ETF, and EWZS, the small cap version of this. This is looking quite bullish. We have higher highs, higher lows. We just broke to a new closing recent high. Another one of my largest holdings, KWeb, Chinese Internet ETF, actually dropped quite a bit today by 2.73%. I know one of my commenters said something like that. Oh, you better check up on KWeb. We're back below that line. I'm not too worried about it, especially if we go back above it, and also especially because let's take a look at the Hang Seng, which is the larger index of China, if you want to see where Chinese stocks are going generally. And this is not any kind of concerning pattern right now. We did have a drop of 1.27% on the day, but still very clearly in like higher highs, higher low situation for now. We'll have to see if KWeb gets back into a very much more clear bullish mode or not above this line. Again, if you take the lines away, this chart too, it still has higher highs and higher lows here, just as a basic bullish pattern. Copper almost did something interesting today. It did drop by 1%. It's one of the larger candles, but we're still within a pretty darn tight range. We don't often go this flat for this long in copper, which tells me the breakout's going to be pretty big. My guess is the breakout's going to be to the downside, but we'll see. As far as I don't like to do time counts very much, but as far as time counts goes, this is 19. Your typical bull or bear flag, to my knowledge, is 20. So if we get past 20, then I believe we start to factor in a little higher chance of a move to the upside. But right now, I think probabilities still favor the downside just on the pattern alone with the bear flag looking thing. Next, junk bond spreads. Tighter again today, 2.78%. Watch out. You remember what happened right before the great financial crisis. Again, we got to a record tightness in junk bond credit spreads of 2.46 before things really got blown out. And last chart of the day, again, this is the same chart that my YouTube account kind of blew up over, the 10-year minus 3-month contracting within this range. I find it really interesting, especially at the very tail end here, just how close we are. We're just winding up right at that zero marker. Just, I mean, this is an incredible chart. You know, if you were to compare this to any other financial chart, you know, being in such a tight range for so long and tightening up, you would normally expect a pretty darn big breakout. So, you know, black swan ahead. The main thing going on is the question, is Nvidia now going to fall or not? And if it does fall, will it drag everything with it or not? So that's all for me and my crystal ball. Hope you enjoyed. Thank you for watching and see you next time. Robschild.